Good afternoon. My name is Tatiana Glebkivska. When we onboard a new client, the question arises whether their business should be on accrual or cash basis. The important thing to remember is that each accounting method has its advantages and disadvantages. Cash accounting method might provide a good cash picture. You almost always will know what's in your bank and you will know how well you receive your accounts receivable. However, what it will not account for is a good income picture. Let's say your business has some cycle to it. For example, your services slow down a little bit in summer. In that case, on cash accounting, so in summer you don't perform any revenue, but all clients started paying you in summer. So you will see a lot of revenue in summer, even though in reality you're not really working and taking a big vacation. So that's a disadvantage of a cash method. As far as accrual method of accounting, it's opposite. This one provides more natural picture of your income and it's more easily predictable. You can match your expenses with revenue. Let's see, like with that cleaning companies, when you see a certain parking expenses next to that office, you expect to see the revenue for that particular client and you will see it on accrual basis. However, accrual basis can be tricky sometimes in terms of cash. You can see a lot of revenue recorded on your income statement, but you will not see cash received. So, for example, you have a lot of accounts receivable balance and the clients are not planning to pay you anytime soon. Sometimes it's called revenue rich but cash poor. We work with that. A lot of our clients are on accrual basis. And at our client accounting services team, we provide the cash management services, which usually consist of monthly cash flow statement, which will help you see how your accounts receivables are being collected and incurred, how fast your clients are paying you. You will also see how fast you pay your accounts payable, and you will see your inventory turnover. Those are some major non-cash accounts that actually do affect your cash. Another tool that we can provide for cash management is cash projection schedule, and in that schedule we can project how much revenue you're gonna receive, how much cash you're gonna receive each month, and we can even determine if any of your accounts receivables are not going to be collected and we won't see cash for it at all. Also on that schedule we will record the payments that we are expecting to see, with the payments that are going to be going out for your expenses. Which will help you have a good picture of your bank balance, not only now but going forward, which in turn, of course, is very helpful when we are planning for big purchases, as well as in cyclical business when we're planning for those times of the year when there's going to be no revenue and no receipts. However, some fixed expenses like rent and electricity still will be incurred. Overall, it's a good conversation with accountant whether the business should be on cash or accrual basis. Not only we will help determine that, we will also help understand the accruals that need to be done every month. Some transactions we believe should be accrued monthly, while others can be accrued only once a year. Then there are some accounts which are so little and not important that it's not even worth spending time accruing them. So it's a good conversation with accountant what method to adopt, whether cash or accrual. Thank you.